Hello, hello. Happy Friday, everyone. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup for May 15th, 2026. Ron Quaranta here with my good friend and co-host David Brill. Joshua Ashley Klayman may or may not be on location or on the jet, David. Wait, I stand corrected. She is joining us now, I think. Let's try again. I love technical difficulties on the fly. David, Josh, thank you for joining. For everyone in the audience, thank you so much for watching us on LinkedIn Live or watching us on X. I stand corrected. She's in the Bugatti, David. Before we
I'm
begin,
here,
everyone,
guys. I'm here. I had to be on the move for this.
No worries. For everyone who's watching, our usual disclaimer is obviously nothing discussed as investment or legal advice, and really our own personal opinion, not necessarily the opinions of our respective firms. David, Josh, let me tell you, traveling for a couple of weeks is exhausting, but it is good to be back. We're just back from Washington, D.C. Lots to cover. David, Josh, the big news, Clarity got past committee. Were you surprised?
You know, I wasn't surprised based on two things. One is that there was a report that Senator Kennedy was going to move it forward, so we knew he had the Republicans, enough votes from the Republicans. But one of our meetings, with one of the senators, she was very bullish on it getting through committee, and sure enough, she was prescient about that. So, based on those conversations we had, no, I wasn't surprised.
Josh, I was hoping David would go with, because we were in DC, the entirety of the committee realized this is important and moved it forward. But Josh, what was your takeaway?
So, I, similar to David, was not surprised for the same reason. My recollection of how the senator described the prospects was that they were pretty certain in her view. So, thrilled about that. What I will say is it certainly makes up for what I heard from you guys about what the price did while we were in DC. So hopefully we worked some magic our own way and even got a little press out of it, as it turns out.
We did get some press. Yeah, well, we did get some press. There will be other posts in social media that talks a little bit about the meeting. And I think we could disclose here, David, Josh, we had met with this SEC Crypto Task Force. We had met with folks at the CFTC Innovation Task Force, met with Congressman Miller and discussed the parity bill with a couple of the tax geniuses that joined us. So shout out to Sarah Atkinson at Eisner, 100%. Shout out to Cynthia Peterson at Cohen. I do unbelievable knowledge of tax, which is something my little brain can't possibly handle. Met with Senator Gillibrand briefly and the team there, Dave and Josh, which was really, really great. It's interesting because in the wake of all of this, David, Josh, we had seen Clarity come through committee, and there's the sausage making of Washington, D.C., and we're probably looking at a full Senate vote and a full vote and potential signature into deep June and maybe July. But David, the macro still is out there, and the inflation numbers and jobs data didn't really help. We're looking at Bitcoin at 79. Inflation was ugly, and for the record, everyone in the audience, you've not lived, Josh, we missed you here, but when you're having early morning coffee with David Brill and Jason Gottlieb and talking about inflation data, that one-ups any text message, Josh, we send you about economic stats. But David, are you sort of disappointed as I am that the economic data is really still heavily weighing?
I'm really not surprised because I think the macro picture is the most complicated it's been in years.
Yeah.
CPI is at 3.8%, PPI is at 6% year over year, and the Fed voting 8-4 to hold rates. That's a central bank under serious pressure.
Yeah.
The Iran conflict is the wild card. Energy prices are really driving a lot of the move. And there's really no policy that solves for geopolitical, oil shock.
Yeah.
And, what's more interesting is for crypto, it really makes a very complicated picture because Bitcoin has historically benefited from inflation fears as a store of value hedge.
Yeah.
But high rates are bad for risk asset broadly. So, we have to figure out which narrative wins, digital gold or risk asset, because that'll really determine where Bitcoin goes from here.
Yeah. And David,
which
Josh,
one do you think?
Go ahead, Josh. Go ahead.
I was just going to say, if you had to pick, which one do you think it is? Which one do you think it will be? Can it not be
that's
both? Yeah, to David, but also to you, Ron. I mean, David's kind of teed it up.
David, you go first, bud.
You know, just looking at the chart and looking at the macro, I think until we get a passage of clarity, and that's being, optimistic, it's really hard to see Bitcoin going much higher than the low 80s.
I'm going to say something that David may or may not agree with, Josh. I will say it's both, depending on who you are and how you position.
Mm.
And I mean, David, you and I have this series of complicated conversations. I often use this phrase that it is a weird economy, right? We're talking about inflation. We're talking about inflation beating up on Bitcoin, which is antithetical to it being a digital gold hedge. But the job market's relatively robust, all things considered. You've got S&P and Dow and others at all-time highs, minus today, which is an off day. So it is a weird series of economic data that we have to look at crypto, through the lens of crypto app. Would you agree with that?
Josh, I think Ron is learning from us and gave us a nice lawyer answer there.
100%. Well, I feel like Ron is an honorary lawyer.
Yes,
I mean,
Ron.
he doesn't do the unauthorized practice of law for anyone watching at home. None of that.
Please,
But
do not send me those emails. I am not practicing law. I just know enough to ask really smart lawyers really interesting questions. And there's one phrase, Josh, you use often that I'm trying to remember, but it's something like holding everything else constant or something along those lines. And I find myself invoking that in conversations with non-lawyers who have no idea what I'm talking. Like, what are you talking about? So I am grateful for the expansion of my vocabulary to you both. In the context of all of this, let's talk a little bit about it. We talked about consensus last week. We talked about our visit in D.C. and we should dive into that probably a little bit more. But I'm curious. I still get the tone of overall optimism, despite geopolitical, despite macro headwinds, despite people screaming about whether or not there'll be an interest rate cut this year. Josh, do you still have that kind of positive vibe from these trips the three of us have made?
100%. I mean, I think all across the world, people are excited and increasingly excited. And I think the U.S. opening up in this regard, I think folks are very excited. I do think one thing maybe I should mention is, and maybe you guys won't like this, but I think if you're in our industry and you've been in our industry for a long time, you kind of have to be an optimist, because if you've stuck around through the tough times, and I'm not saying that this is one of those tough times, please stuck around during the dark days and the cold nights. Right? And I think we'll always find reasons to keep going and keep building. But that being said, as we can see from the passage of clarity out of committee, there's reason to be excited.
Josh, you're cutting out a little bit. You've got some fishbowl audio going on, but I did catch the comment about the dark nights, the dark winter nights over in the paneled mahogany room by the fireplace, wondering what the heck I've done with my career. David, you agree?
I do. I'm going to take a little different flavor and saying, look, what's happening this week with BlackRock and JP Morgan isn't incremental, it's structural. When the world's largest asset manager files for the SEC for a tokenized treasury fund, and JP Morgan files for a tokenized money market specifically designed to meet, Genius Act reserve requirements, that's not a pilot program. That's the financial system really being rebuilt on blockchain rails in real time. I mean, and those are significant data points. Now, for the more crypto native side of things, I still think it's bullish that we potentially will have two paths to getting, more robust regulation for listing tokens and for token taxonomy. So yeah, I am bullish. I just think the price might take a while to catch up.
Yep. As my friends tell me, Josh, hopelessly optimistic, but we keep marching forward. David, Josh, I've been thinking a little bit about this as well. And for the record, for everyone in the audience, if you've got questions for David or Josh, please put them in the chat. We're happy to address them. And also for the record, you've not lived until you've left the Senate office building in DC with David and Josh and 8 or 9 other colleagues and raced through a rainstorm to Union Station or our various locations, trying to avoid being drowned out in Washington, D.C., which was fun. But Josh, David, I've also been in the wake of our conversations in D.C., I've been thinking about the future. And, David, you referenced tokenization and BlackRock and some of these massive funds that are tokenizing broadly financial instruments. I'm beginning to think there needs to be a conversation about the maintenance of privacy in financial markets on behalf of customers and the leveraging or using of public-based blockchains. And I think that's a battle we haven't yet fought, David. And I know I'm ripping up the script a little bit, but do you see my concern here? Do you think that's an appropriate concern? And the industry needs to do more to address that.
Look, I agree. I think, while there is a need for some KYC and AML, the fact that a lot of the PII is sort of centralized in certain places, and then you have these hacks, and suddenly massive amounts of people's PII are spread along the dark web, it's a problem.
Yeah.
I think we, both as an industry and regulators, need to come to find some agreement where we can, abide by these, AML issues and KYC concerns, but also not centralize all this data to make it like a honeypot for hackers and bad actors to access it.
Yeah. Josh, is this an issue that comes up? And again, without mentioning client names, I know you both have a long list of clients across different verticals. Is this something that comes up? Like, how do we protect customer information because we're now leveraging blockchain and crypto?
I mean, I think it certainly does, and it certainly should, right, in terms of thinking about customer data. But I would say, again, not bringing up the Q word that I've become famous for in these, or infamous for in these circles, that and the UCC. But with quantum, I think people need to be focused on this anyway, because customer data, even if encrypted, potentially can become exposed and decrypted. So I think this should be front of mind for everyone.
Yeah. No, agreed. Josh, and I think the Starlink and the Mercedes Maybach, which I assume Josh is being chauffeured around in, I'll have to talk to Elon about it. David, Josh, I want to plow into that a little bit more. Because often we talk about tokenization of real world assets. And I think the other dichotomy here, David, we hear a lot about financial services firms tokenizing broadly financial instruments, treasury funds, money market funds, et cetera. And we both understand, it looks like we lost Josh. We both understand that, but we still have a way to go from the perspective of real world physical assets, David. And I'm not sure I see the deep progress I had hoped to see at this point. Am I overthinking it?
No, I don't think you're overthinking it. I think there has to be some realism. Like, you can't just, for instance, real estate is, people think of it and they're like, oh, I just want to tokenize real estate and, let people buy tokens and in a real estate project. But it's just not that simple. First of all, that's why we have REITs.
Fair.
So there are a lot of securities laws, regulations around these things too. So I think it's important for people to realize that, like, tokenization is, has a lot of good use cases, freeing up of collateral, creating liquidity in hard assets. But we do have regulations that just, doesn't mean that, okay, I have a building and now suddenly I can tokenize it. So I think we just have to be, mindful of that. Mm-hmm. And I get that question a lot of times from people, like on the real estate side. Well, why don't they just do a REIT? Or why don't they do something that's already exists? So I think it's not only, we know why people want to tokenize it to release liquidity, but it has to be in a way that's going to serve the buyers, because just because a seller wants to do that doesn't mean that it's attracted to a buyer. And then the last thing I would say is that, you still have the accredited investor standards sitting out there. And so there's still limited access to some of these products.
Yeah. And David, if I could, and Josh would love you to weigh in, we actually raised, I probably got in trouble for raising it, but we raised the accredited investor standards at some of our meetings in Washington. What was your thought on how it was taken, how that was received? Do you think there's consensus that those need to be updated? Josh?
I mean, I hope my audio is better now. Is it?
Yes.
Okay, great. I mean, I think it was well received. Certainly, the person to whom we had proposed it, the congressperson, seemed to be very in favor of it, or at least reportedly, certain members of our team had had separate discussions in which such congressperson had indicated support for modifying that. I think there's lots of good reasons to have a different standard. The one thing that I do think is something to be cautious about, though, is if you open that up, you also open up the question of whether you should be adjusting for inflation. And I think right now, with the levels that they're set at, I mean, I would hate for it to be something where we think we're getting a more liberal standard, but the dollar threshold ends up rising so much that we, it's 6 of one, half dozen of the other, or worse.
For everyone watching, you don't know what it's like to be sort of yelled at by Josh for saying adjusted for inflation and realizing I should have kept my mouth shut. But Josh, really good points.
I didn't, yeah.
No, I know. I'm exaggerating a bit. David, Josh, anything else you wanted to cover about the trip? I felt that there was so much there. I've been taking notes since we returned around midnight or 3 a.m., depending on how we were traveling. Anything else you want to raise? It was a really fascinating series of conversations.
I have a number of things I think are really relevant. And I think, for us having just been in these rooms this week, we can tell people that both agencies are genuinely committed to getting this right. The coordination between Atkins and Seelig is real. It isn't just PR.
Yep.
I came away with is that the Clarity Act passing committee yesterday isn't just a legislative milestone. It's a signal both agencies needed to accelerate their own rulemaking. Yep. And I think why I say that is there's no guarantee Clarity will get approved. Will get ratified and get the 60 votes it needs in the Senate. But I think it was a sign that it should be full speed ahead on drafting, regulations, regardless if it gets approved. It may have a different flavor if it's the SEC CFTC version regarding like token taxonomy, but I think it's a sign that it's full speed ahead for the regulatory agencies to draft the regulations.
Yeah, David, I agree with you. That definitely came out that this coordination between the agencies is real and not just marketing. Particularly, and I was really not taken aback, that's too strong a phrase, but this kind of consistent, David, you and I were talking about it in the virtual green room, bring your recommendations. And there's value to the introductions and there's value to the conversations, but the depth of engagement with industry participants and the specific recommendations that they're looking for from the minds that are in industry is really, really fascinating to me. Josh, tell me what you thought as well. And I want to make sure we're covering so many of the meetings and conversations that we had.
Sure. One thing that struck me in terms of meeting with Congress people specifically is just that while we may look at things like the Clarity Act or others and have a particular view on how they will be implemented and interpreted and how that will, adjust in the market or what the ramifications may be for different tokens and token issuers and others, what occurred to me is that often, and maybe it shouldn't have been a surprise, but that often when we are getting compromised positions and we have people coming together on a bill, which hopefully will become law, their expectations of how the bill will actually apply in the market and what the effects will be can be quite different. Notwithstanding that we have words, right? Like the idea of I think how you view the market, the digital asset industry, the space, and the projects going on will have a big effect on how you think those projects and tokens are going to map onto the classification. I thought that was really interesting to be reminded of that. I was also so impressed by the SEC and the CFTC task forces. Again, the amount of topics that they're covering is astounding. And I was very appreciative that really there was a huge turnout from both task forces for the meetings. I mean, there was double, when we went to the SEC task force, crypto task force, there were 2 rows of chairs of people,
They almost outnumbered us.
Yeah, it was very impressive. I also will say one thing, and this is just a plug for our WSBA colleagues. How incredible was it to be able to go to all these different places? And as you noted, we also had discussions about the Parity Act, right? So the tax bill, which I am not a tax lawyer. I am not a tax expert at all. But to hear our colleagues be able to converse with the congressperson and his legislative assistant, it was fascinating. Like they were able to be like this provision, like from memory, the number. So I would just say we're really lucky that there's so much engagement right now in Washington, and that people were so excited to speak.
Yeah,
but what about you, Ron? What caught your ear?
So several things, and as a total aside, real quickly, again, for anyone who's watching, if you've got additional questions, please let us know. Put it in the chat. Shout out to staffers, and Josh, David, we say this every single year. These people work hard, and they are in many instances deep subject matter experts on the topics that they're researching on behalf of Congress people and senators. Josh, I agree with you. The depth and breadth of the conversation is really interesting, and I want to deep dive on that a little bit, because I think there's an opportunity for the industry, and I keep using the word recommendation given some of the conversations we've had. Josh, David, we've often said one of the challenges is, in the wake of Genius and now in the wake of Clarity potentially becoming law, something in the crypto digital asset space may start as a non-security and become a security, or vice versa. And I think one of the challenges and opportunities that I got out of the conversation, Josh, to your point, is the industry needs to describe the use cases where that may or may not happen, because that is markedly different from how the world has operated before. David, help me with the deep dive there. Did you get that same takeaway?
I did. And I think we got a little bit of a wake-up call about the views about what's truly decentralized and what our congressional representatives think about what decentralization is, and the ability to meet decentralization. So I think one of our takeaways is really to think about what does decentralization look like, and maybe we need to do more education around that, because my view personally is, because there are some requirements of protocols, I think there can be an administrative function in a project, and that doesn't mean that it's not truly decentralized. I think those two can be combined together, but I think that there's more skepticism around what's truly decentralized in our conversations than maybe I had expected or I had hoped.
Yeah. And I don't know if Josh still hears us. She's frozen. For the record, also, her frozen pictures are always like normal looking pictures, David. When you and I freeze, it's the most awkward pose. David, I want to go a little deeper on that as well, because I'm with you in the DeFi conversation, and the true nature of decentralization is important. But there's no standard there. And I'm not necessarily advocating for a standard, but that's going to be a heavy lift, no?
Well, I mean, you do have some talking points we've seen in the past. Like Hinman had his list of factors, and look, I think that we can have a place, like I said before, where a project is decentralized, that the project token holders will vote to do certain things for the project and to take actions. But I don't think that administration function alone makes it not decentralized.
Fair.
And I think another point worth mentioning is, I think what our group brought in those meetings was a real depth of knowledge and sophistication of questions that were put in front of the task forces. And I think, they had the depth of knowledge to really engage with us on that. And, sometimes they could say, like, it's being developed, it hasn't been, put out broadly to the public yet. And other times, they pointed to certain guidance or speeches that were made. So I think this is the level of interaction we wanted, during the Biden administration when Chair Gensler was in office. And now we're getting that, and we're making progress because of it.
Yeah. Josh, welcome back. I think the other word that came to my perspective, David, Josh, during our trip there, was disclosures. And I do think also from the perspective of the industry, there's an opportunity to speak to and in many ways define disclosures. Josh, did you catch that? And is that something that's a worthwhile initiative or effort for industry participants?
So I think 100%. I mean, there were some cases in which, or some instances in which we actually recommended disclosure, right? Whether it came to tokenization and understanding like who the issuer is, some things that the SEC has already touched upon, right? But really thinking about how we, how we make that more uniform, how we make it more apparent. Another place that came up with is, again, quantum, right? And how do we make sure it brings quantum washing in the future?
Yeah, and for everyone who's watching, quantum washing was the first time many people in DC that we met. That was the first time they heard that phrase, Josh. So good job, David. Josh, I know we've only got a little bit of time. For everyone,
Maybe I coined it. I don't know.
Is there a trademark registration you should start considering about that, Josh? I'm curious. You may not have heard me. David, Josh, as we begin to close up, there's a lot more coming, and we talked about our AI quantum working group that's coming up. We talked about our cybersecurity working group and all of the work that we're doing there as well. But David, I wanted to talk a little bit about price action also, because one of the things I've been trying to focus on, Josh, I'm going on the trader side of the conversation, not the law side, so forgive me. But what are the options activities that you're seeing, David? And finally, are you going to start a Zcash DAT, David?
Yeah. Well, Zcash has been doing pretty well. I don't know, a Zcash DAT might be antithetical to the point of Zcash in the first place, but that's a whole nother story. Look, I still think, especially, it's really interesting because, right now, some of the stocks that are trading, some of the equities that are trading in the stock market are trading more like altcoins, with the moves that they're having in single day moves. And, I've been amazed at the semiconductors and a lot of the AI related equities and how strong a moves they've had.
Yeah.
I'm intentionally not picking individual ones, but even some of the ETFs for the sectors have been really hot. And I think in a lot of ways that AI right now is taking sort of the thunder out of the, crypto altcoin market. So I think that's where a lot of liquidity is going.
Josh, did you notice that we got almost halfway through this, or almost to the end of the session, and before David dove into alts? And David,
100%.
That's why we love you, buddy. But David, it's a really good point. So let me ask this question: if we're going to say, the Mag 7, if we're going to say S&P 500 are really sucking the air out of investing in crypto because there's so much ROI there, with companies that are hitting all-time highs, with earnings for those companies. Let's look at the equity IPO pipeline. Let's go a little non-crypto here. You've got SpaceX coming up. You've got some major firms coming up where hundreds of billions potentially are going to be allocated, both from institutional and retail perspective. Does that bode ill for crypto space?
Well, I'm going to give you a very hot take for our episode. Is that I think that the top of the market for this year may be the SpaceX IPO, because I think a lot of the liquidity in the market is going to go to those couple of IPOs and SpaceX in particular. And I think that there just may not be more liquidity to replace that. And so that may be, that or the, right before the elections will be sort of the top of the market. But look, I still think we have a challenge. We need to show that that certain altcoins, like for instance, Hype has a lot of revenue attached to it. And you can look at it and say, okay, not sure what the token is actually worth right now, but I can see that it has a lot of revenue from the use of the token and the use of the protocol. And then you can relate to that. I think other protocols need to do more to highlight the revenue that they're drawing from the protocol.
Is it a marketing problem for them? Meaning how they talk to the investment world or the people who would buy it regarding those tokens?
Well, if you're a decentralized protocol, who's going to be talking about it on your behalf? But regardless of that,
that's my point, David. Right? How do we have a conversation about these decentralized organizations and communities that issue these tokens, but the information about the tokens are nebulous at best?
The foundations can talk about it, but I think we need to do a better job of helping people understand like what token holders, what benefits token holders have because they don't have equity. So I think the better job we can do in showing that, oh, these token projects are generating revenue and that's going to the token holders, that could help with the valuation of token projects and maybe see more liquidity come into them.
Yep.
The last thing I'll say is that there will be a point where, I don't know if it'll be this year or next year, when Bitcoin starts rising, and then you will see, all the meme coins start rising, and we will see another cycle of this. But it's really hard to see where the liquidity comes from when you're seeing, these robust moves in the space sector and photonics and in AI related stocks.
Yeah, Josh, I felt you wanted to weigh in here. Go for it.
Yeah, I'm just wondering, David, when you mentioned that you think the SpaceX IPO and maybe some things before the election will be the high point of the market, do you mean the stock market? And for the alt market or for the crypto market, will that be a low point for the crypto market if capital is redeployed for the SpaceX IPO or things like that? Or am I thinking about this wrong?
Well, I think there's so much liquidity that's going to go into those IPOs that it's possible that those will be the highs for the year. I don't necessarily think that existing liquidity may leave the crypto market, although it could. But I think, if people are wanting to invest in those hot IPOs, money that might have gone into Bitcoin and ETH or DATCOs or other projects will likely go that way, especially if they're tech-focused folks who want to allocate to technology.
We got to wrap it up, guys. And Josh, David, it was so great to see you both 2 straight weeks in a row as we traipse throughout the eastern seaboard of the United States. I'm going to make a prediction, David. I think we are, macro aside, geopolitical issues aside, clarity aside, and those are all important factors. My take is that we're in this broad channel holding pattern, particularly for BTC and ETH, until after the election. I think there's still deep concern about, the turnover potentially of both the House and the Senate and how that impacts the industry. So I'm not wagering you on that, David. So just get it out of your head automatically. David, Josh, I'm hoping to see you both again soon. What do you have coming up for next week? Josh, you can go first since you're in the Maybach.
I mean, I have a bunch of things coming up. I have to check my schedule, though. I think I might need to be in Vienna next week for a digital-related reason. I believe that I have a roundtable next week, but I frankly need to check my schedule for next week. So much has been going on this week that I'm excited for next week to get here.
David, it's a good life. I might be in Vienna next week, depending on where the team takes me. David, what about you, old friend?
Well, I just want to take a moment to thank you, Ron, for putting together, our Washington, D.C., fly-in. I think we really, we got to see the CFTC task force, the SEC task force, multiple, House of Representative members and Senator Gillibrand. And so I want to thank you. And I also want to thank WSBA member Andrew Siegel for helping arrange our meeting with Senator Gillibrand, and also all the hard work he's been doing, helping draft sections of clarity and helping him and the team move that forward. My weekend is really not as adventurous as Josh, as I'll be in sunny Miami enjoying Florida things, the barbecue. Going to go see Bill Burr tonight, who's a good comedian. That should be fun.
Oh, nice.
And then a little bit of the NBA playoffs wrapped in. So fun weekend and some crypto reading, of course.
Of course, David, it was a privilege. Thank you for being part of it, and thank you for the kind words. And I just want to do a quick shout out. Jason Gottlieb, Cynthia Peterson, Linda Lerner, Sarah Adkisson, Joey Ryan, David Nibbs, so many of the colleagues who joined us. I'm probably missing someone. If I am, please forgive me. But it was so good to join all of our colleagues there in DC. David, likewise, I'm going to try to spend a little downtime, have a lot of work to do, and WSBA has some big announcements coming up. But let's leave it there. For everyone in the audience, thank you so much for joining us. It was a privilege. If you've got additional questions, info@wsba.co, and we will be back next week. Take care.
Take care, everybody.
Bye-bye.